Hello, Warriors. Dale Pinkert at TradeGATEHub.com. We are powered and sponsored by TradeView Markets. We have Fed Week this week, and the markets are beginning the week with a give back, natural reaction as we wait for the Fed to raise rates by 75 basis points. And the most important part is going to be their presser. We're not going to get employment data till Friday. That's going to be another market mover. So the question I'm asking myself as a trader is, what markets are going to be the most resilient after the Fed makes its move and talks like a hawk? I don't think they're going to talk about a pause in the press conference. So what I want to do today, since I'm not going to be here, I'm going to be doing interviews on Wednesday and Thursday. This is your prep recording that you could play for the next few days and remind yourself of certain areas that could be key after the Fed makes its move and holds its press conference. So let's start off with Japanese yen. So I drew this, let's see if it's still there. Okay, it's not there anymore. But anyway, I'm looking for the potential of a descending triangle here. And I had a line drawn off these highs. There's nothing for it to tag. So I'm just thinking maybe around the 150 level. So you could see this flat bottom that we have right here at the 146 level. We were never able to close underneath it. This is a demarcation line of what I believe is going to be descending triangle. So I'm going to be looking for, after the Fed, if we're not making new highs, and say, for example, we're trading up here around 150 to attempt shorts in the US dollar yen, because my view is that even though the Fed could be hawkish, that yields may have peaked, and this could end up just being a failing rally up to 418, 420, which means that US dollar yen could be a failing rally off this break and support here. The descending triangle and the yen closes under 146, give you 140. And if we fail in the 10-year, I think there's a possibility, if I take it out to some time frames, because I do believe we're going to start getting inflation data that's not great, but in comparison to last year, it's going to look pretty good, that we could end up trading back down to 3.5, and then eventually down towards this 283% level, this 50-week moving average right here. I also want to talk about what could happen here in the commodity currencies. What's a possible formation that I'll be looking for? And as you can tell, I have a similar neckline here, flat line here in the USDCAD. And after the Fed, if the best Canada could do is rally back up towards 138 or so, you could have stops over the high, anticipating a potential right shoulder up here, or you could wait for a breakdown under this level that should give you 34 in a hurry, but actually measures down to 32. You know, you have about a 500 pip formation here. So even as low as 130 is a possibility, or these prior highs. Aussie may not make a new low. Maybe we pause here at 63. If it totally aborts, I'm a buyer in Aussie at 61. I warned last week about the fact that we could finally get this washout in gold. And I've drawn a couple of charts that have circles for target zones and 3 drive formations, which in gold, post-Fed comes in around 1580. Silver, similar formation, 3 drive to a bottom formation that would take place just under the prior lows, call it 1680, where if we get down there, I'd be interested in getting long and adding to mining positions, currently flat on leverage positions, holding miners for the long term. We need closes back over 21 to say that the bull market in silver is underway. Something that aborted, that's not such a great sign. I thought that copper was breaking out last week, and for everyone who has been long Freeport, it's a different chart. So with what copper's doing here, nothing wrong with going to the door and taking some profits. I think I had Freeport up here. Where is it? Here we go. So it's coming in lower, but keep this in mind on this chart. Now look at Freeport. I'd be booking it. And basically what I am looking for is what opportunities will the Fed create, and what stuff that I like today will I have a chance to buy cheaper post-Fed? It's that simple. What am I going to buy and be able to buy cheaper? And I've mentioned a couple. So I'd be careful about Freeport longs. I liked it, but now the copper is rolling over. I'd be booking it. So in fact, I'm only holding positions that I've had before coming into this week. So I'm pretty flat going into the Fed. I like being that way. You know, sometimes you have to almost pretend you're flat. Say you have a position, say you're underwater on it, but it's in an interesting zone where, you know, if you weren't underwater, you might think about shorting it or buying it. And as a coach, I have to do this myself. Ask yourself the question that if I was flat, what would I be doing here? Because sometimes what we have on the books definitely influences what we're going to do when we, well, I'm down, but that has nothing to do with the market. So write it down. When you're in a drawdown, but you see a trade that looks appealing to you, ask yourself this question. If I was flat, what would I be doing right now? And might be able to get you to take some action on that. Moving to S&Ps, what a great run it had. Had this little pullback here under 3,800, which it corrected. If you were in main chat, put out a buy near the low here. And then after this pullback, tactically got knocked out in the after hours under 3,800, had to recommit. That's another thing. If you're tactically wrong about something, but the market is still working your narrative, which was a 38 neckline, then what do you do? So you're stopped out on this move, but the next candle that is starting to close, it's trading back above, which was here. You could tell was starting here. You just go with the candle, and your narrative of being bullish, because I'm not sure what the Fed's going to do, but I still think that there's potential for some more upside towards 41.40. Wanted to show you something that's really interesting that I've been talking about for a while. In fact, I brought it up in the room. I posted charts, and it's about this wheat. Okay, so I was talking about buying wheat. We have the news out of Ukraine. I think it's just beginning. I think when you look back, I was showing weeklies that it was in a putting in higher lows. Wheat looks pretty good. I don't know why we can't attack the highs that we had on the invasion. Corn looks okay. It's mainly about wheat because it's mainly about Ukraine. But like the way the wheat is acting, I think it could be long wheat for a move at least back to 10. And this is just because they're not going to let grain shipments go. I know a lot of people are saying that they're not going to use, there's not going to be a dirty bomb, but if there was a dirty bomb, that land would not be arable forever. So just a food hedge that I talked about in the wheat market. And I'm getting ready for the Fed. Have some great guests. In fact, tomorrow, Mike and I will be talking to Danny Giza of the SIBO. If you're a VIX trader, you want to catch that. And I'm leaving you with some ideas for potentially to short the yen here after the Fed. All of these ideas are post-Fed, right? So we'll see what happens if it turns out to be some type of descending triangle. Again, in Canada, we're about 150 pips away from it having symmetry for a potential, this is 38.30, 180 pips away for a potential right shoulder. When it comes to the Dixie, I'm thinking 112 is a big level. I have a 2-week off number right there at 111.70. So we're still 70 points away. And this 112 area looks pretty important to me. Here's 111.70. I have some moving averages coming in as well. Mike will be with us in about an hour and 20 minutes. Good hunting. You know, it's okay at times to be a spectator rather than a speculator, especially if you've had a few good weeks and, you know, caught the run in the S&Ps and prepare yourself for what could be important inflection points, which, you know, $50 lower in the gold, that we could be there. Silver has quite a bit to fall for that 1680 level. We'll see. And is this S&P rally over? I don't think so. But I want to see what the Fed says, how deep the corrections are, what markets are putting in higher lows or making lower lows will be the determination of what's attractive enough for me to assume risk. So remember, don't just count your pips, count your blessings. I'll see you here tomorrow with Mike for our Tuesday macro talk, and we'll see what Mike is seeing a day prior to the Fed. If you are being helped by our videos, spread the word, give us a like, and check out TradeView Markets. They have competitive spreads. In fact, I'll bet you, and you could tell me here, that their spreads are tighter than who you're trading with right now. So that's a wrap, everyone. See everyone for Turnaround Tuesday, which will mean nothing because we could have a wicked Wednesday with the Fed. Throw away your charts for a few days, but prepare yourself to